Hi, let me be the first person to tell you that S-REITs has entered its worst correction in the 20-year history. Yes, this is the ninth REIT correction other than the two crises that you saw during the global financial crisis of 2008 and the pandemic sell-off in 2020. Essentially, S-REITs looking at the market and looking at how the index is corrected 662 on Friday, it is down 24%, worse off than the two crises that you saw over here. Let's in this week's video, we will actually look at some of the issues. We also look at essentially some of the questions that you have close to your heart as a real estate investment trust investor, as well as those looking for generating passive income in real estate investment trusts and what lies ahead. So tell us, Gabriel, how is this correction in terms of magnitude, in terms of length, differs from the previous eight corrections in S-REIT's 20-year history? As of Friday, when the index hit 662, S-REITs are down 24%. The second of worst correction is only 22%. The average of the nine corrections is in the region of 13.7%. If you compare this to the global financial crisis where REITs sold off by 70%, as well as a pandemic where REITs sold off by 36%, these are the statistics. In terms of length, you notice that we're in a 6 month of correction compared to the average of 7 months. So we are close to essentially the averages that we have seen so far. But if you need to conclude, there's one thing that is S-REITs have corrected fast and furious in a shorter period of time as compared to previous corrections. So tell us, Gabriel, why are you so happy in times of correction like this? Shouldn't someone be panicking, at this juncture, of the corrections? And essentially, what is it that in GCP Global that you were able to prepare investors for this? Well, that's easy. That's because in our classes, as well as in the books that we have written, this is Making Your Millions in REITs in English. This is Making Your Millions in REITs in Chinese, which is actually available in the US as well as in China. We have actually advocated and essentially the view that a correction was imminent. This was guided in our classes last year, and now the correction has happened. Now, essentially, the correction gives you one of the best opportunities to make your millions in real estate investment trusts, which is exactly what I did in the global financial crisis, and that actually allowed me to retire at the age of early 40s. I believe that essentially, if you take this correction fine and well, new wealth can be created. You can also retire like me in your 40s or maybe earlier, if the situation actually allows. Now, how were we able to prepare for this correction? Simple. We had warned earlier in our various quarterly REITs investment classes that the market was ripe for correction. If you ask, did we anticipate that this is going to be the worst correction? The answer is no. But we do know that most corrections, it would actually go down by as much as 13, 15%. More so that if you had a very good run that was actually preceding this particular correction, then REITs will correct far more. So essentially, returning back to averages is quite normal. It's quite normal behavior of real estate investment market. And what do we have to go on? It was actually our experience in our Australian REIT market. While having lived in Melbourne for 14 years and following the REIT market in Australia for almost 40 years now, essentially this is something that we learned. But of course, we have the US market that we follow very closely. So tell us, Gabriel, as this market correction continue, which are the more resilient REITs and which are the REITs that are more vulnerable for further downside? In my interview at Business Times this week, where I actually highlighted a few variables, these are the key variables that we track for our investors in our various investment class. And essentially, these are one, deteriorating cost of funds; two, interest cover of the REITs not being actually good enough. Thirdly, that the REITs basically management did not have the foresight. So to prepare for this recession, what we meant by this is that instead of de-gearing, some of these REIT managers actually gear up the balance sheet. In a time when interest rates are actually on an incline. And fourthly, we also look at basically where the jurisdiction and the assets are actually located, where the REITs actually derive their revenue from. So, for example, if you actually have assets in Japan, which has suffered a huge, huge fall in Japanese yen historically, in the markets, then essentially you don't expect Japanese revenue to be strong. And also we look at some of the REITs where they have not structured, or being able to parlay their loans maturing in 2023, where we think that interest rates will be at the highest. So essentially, these are the REIT managers that have not actually anticipated this, unfortunately, had not been able to actually parlay this. And now, who suffers? It is the shareholders. Yes, that's precisely what we will do in our half day class to be held on 26th November at Orchard Singapore Hilton. Essentially, this is the period that we will be looking at the REITs in detail, look at essentially the balance sheet, and look at the DPU resilience and to what extent will they be affected in the coming recession. So do join us and enjoy the early bird special when you sign up now before the month end for our class on the 26th of November 2022. We are grateful that Orchard Singapore, which is actually owned by OUE, has recognized us as a good provider of investor education for real estate investment trusts, and we are thankful that they have become our venue sponsor. So once again, ladies and gentlemen, hope to see you there, where we analyze in detail and pick up for you and help you prepare your REITs portfolio should the economy goes into a recession. Till next week, then, do subscribe and smash the like button. So tell us, Gabriel, which are these REITs that essentially will see more downside if they have not prepared their balance sheet well, into this particular recession? And essentially tell us, Gabriel, why is it that these key variables are key? And essentially, can you actually tell us essentially how does the profit and the DPU impact on the balance sheet flows through in terms of the payout for this REIT in the next 2 to 3 years if we enter a recession? Yes, that's precisely what we will do in our half day class to be held on 26th November at Orchard Singapore Hilton. Essentially, this is the period that we will be looking at the REITs in detail, look at essentially the balance sheet, and look at the DPU resilience and to what extent will they be affected in the coming recession. So do join us and enjoy the early bird special when you sign up now before the month end for our class on the 26th of November 2022. We are grateful that Orchard Singapore, which is actually owned by OUE, has recognized us as a good provider of investor education for real estate investment trusts, and we are thankful that they have become our venue sponsor. So once again, ladies and gentlemen, hope to see you there, where we analyze in detail and pick up for you and help you prepare your REITs portfolio should the economy goes into a recession. Till next week, then, do subscribe and smash the like button.